Hi everybody, Alex Deploy here from Expert Forex, and in this video I'm going to show you why using set files is very dangerous. But there is also a right way to use them and there's also a wrong way to use them, and 98% of traders use them in the wrong way. Now, I was reminded about this set file principle as a result of an email that I received from FTMO recently. You may also have received such an email, and it says the timing of a trade entry can make a big difference. So in this video, I am going to show you how results can vary from returns of over $50,000 to a margin call return based on the time and day you start your trading, using the exact same settings, which means that set files produce different results based on the time you start using them. Now, I have discussed this principle of the unreliability of set files in many previous videos, and on your screen you can see a playlist of videos that I have used to explain why set files are unreliable. And today I'm only going to show you one aspect of why they are very unreliable. But certainly I suggest you go and have a look at these videos to get a better feel about what risks you are exposing yourself to use set files. Now, I know traders that buy robots, the first question they ask, have you got set files for these robots? Invariably, they are supplied with historical set files that are generated on a very specific broker and will not help and are very unlikely to produce the same results. But there are also the correct ways of using these set files where you are not increasing your risk, and that will also be covered not in this video but in a follow-on video. But firstly, you need to understand the principle I'm going to show you today. Okay, we've just upgraded the hedged EA and we are doing some tests on the upgraded EA, and on your screen you can see the strategy tester. Here's the strategy tester. There's the hedged EA, the new one, version 3. I'm focusing on the Euro USD, and I'm using the every tick basis, which is the most accurate basis that you can test these strategies on. I'm using a period of 15 minutes and a spread of 1, which is fair for the Euro USD. And while I'm using the Euro USD, it's also one of the low volatility currencies and also one of the lowest trendiness currencies, which makes it a lot safer to trade the hedged EA. So what we've done is we said, okay, let's see how this new hedged EA would have performed this year. So we tested it from the 1st of the 1st up until today, which is the 17th of the 8th, which is a Saturday, but the testing will obviously only run to the 16th, which is the Friday. So what we're going to do now is we're just going to run the settings that are in there. And by the way, these settings are not optimized settings. They are just reasonable settings that I have entered into that I think will be profitable. A full out every tick optimization could possibly take 2 to 3 days. So I'm going to just run the settings that are in there right now, and let's go. So there we are. It started running, and away it goes. And one of the things we could have a look at is maybe the graph, because that always shows the progress that's happening. There was a bit of a drawdown there, and there's where the EA and the drawdown was pretty much on top of each other, very small drawdowns. There's another big drawdown that's occurred there, and basically that's how the trading goes until the date is reached that we have specified. And on it goes, and it's already done 400 transactions. Let's just wait for it to finish. And by the way, I'm not a great fan of backtesting and optimization. I believe that the best settings can be found in forward trading, but that optimization, as we're seeing it here, or backtesting as we're seeing, can be the basis for finding settings that you would forward trade for 3 to 5 weeks to make sure that the results that you're expecting are being produced. Okay, it has stopped, and let's go and have a look at the results. And here's the report. Okay, so what has happened? It's taken $10,000 to $54,000, and that's in a period of 7.5 months. So in 7.5 months, 54,000, and if we continue and it generates funds like that, we could get to a big number. But that's not the idea of this particular video. The video is to create a point of reference, and our point of reference is this $54,000 that got generated. So the point is, what if we change the starting point of this test? And that is exactly what I'm going to do. Let's go 1 week back, and we go to the 25th, and we say, all right, now we've gone 1 week back. We've increased the testing period by 1 week. So what we're saying is we're testing the same set file. The one has started on the 1st of January, the other one has started on the 25th of December. Same settings, identical, and let's see what happens. So we start that one, and it starts again, and there it's trading. Whoop. Okay, the trading's finished, and we go and have a look at the results. And these results basically show them the effects of a margin call. So the loss is minus $7,800. Effectively a margin call. There were only 19 trades made, and all that's happened here is that we've gone 1 week backwards. We started on a different day. Let's have another test. Let's go another week back. So we go here, we change it to the 18th of December, and away we go again. And it starts trading again, and let's see how this one goes. And again, it's pretty fast, and we look at the report, and it has had another margin call. So let's have a look if we pushed it 1 week forward. So instead of starting on the 1st of January, we go to the 8th of January. 8th of January, and we say, okay, let's start the trading. And there the trading starts, and let's see what results come out of starting 1 week later. And it's trading away, and we're waiting patiently for the results. Again, we can look at the graph. That's the most up-to-date version, and there's some drawdowns there. You can see some drawdowns there, but invariably they come back to the break-even situation, and there we are, down again and up again. And remember, this is the hedged EA, trading only one currency, because this is the point that I want to make in this video, is that the starting point of your use of a set file is critical. There are many other reasons why you will fail using set files, but this particular one is an important one to understand. Okay, it stopped there. Let's have a look. And the results are 52,000. 2,000 less than the 1st of January, but at least nicely positive. And that shows you that the delay in 1 week cost this trader $2,000. Now, I hope I've made my point that set files, the success of a set file is dependent on the luck that you have starting at a date that generates positive results very early. If you don't produce positive results very early, you could incur a margin call very quickly, as we've seen with that 1 week earlier start date. When traders come to us and say, these set files you've given me are rubbish, we say, yes, they are rubbish. It's up to you to use them in the correct way. And in the next video, I'm going to show you how you can use exactly the same settings as I've shown you in this video and make them safe to use so that you won't incur those margin calls. I hope you've enjoyed this video, and I hope the illustration that I've shown you gives you something to think about and underlines the importance of you viewing set files as being very, very dangerous. They can produce margin calls at the flip of a coin if you do not start, if you are not lucky enough to start them in a favorable marketing conditions for your particular robot. Please go and view these videos that are in the playlist. Clickable links to this playlist and any items mentioned in this video will be in the description of the video as well as in the first commentary of the video. So from me, Alex Aploy, cheerio.